The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Thanks for bearing with me on some development things I had to do end of last week. Hope you guys caught the Super Bowl. Man, I don't watch football anymore, but I caught the second half of that, and I was like, yeah, what's the odds? And I was actually looking at some odds makers on if they would come back, and man, that was an amazing game. I will say that. Tom Brady, God, stoic. All right, so let's get into the S&Ps here. Let's take a look at. I don't have our scanner up right now because we're trying to make some adjustments, and I've got a new beta version that I installed, and we'll just wait until tomorrow to show you that. But taking a look at the S&Ps, obviously, decent, happy numbers as far as the unemployment report goes. But we obviously haven't made new recent highs, and this is the daily on the continuous contract. We talked about that 2275 area was a pretty big number, but I'm trying to play this still with some options. I had talked to you guys about doing the straddle before the bust out, or the strangle, excuse me, and then being able to kind of leave some puts on. I've actually still got some puts on, and again, that strangle situation doesn't allow you to really suffer too much, especially when you kind of win on one side and then take some off on the other. But I'm not so sure that the latest tweet or the latest argument or phone hanging up incident, this could, there's some, I think, underestimates right now, especially looking at the VIX, of, catching some people long, really. I mean, for that matter. I know that, understanding what's going on with the presidential orders and, some of the things that are going on in deregulating processes, which was just all mucked up for God knows how long, will free up business opportunities. But you got to remember, a lot of things that are, that the president, any president, may propose or kind of want to happen, a lot of those things have to go through Congress, and some of these things aren't going to happen and see the fruits of the labor as quickly as I think some of them market participants have tried to factor this in. And if you think about it, this is my opinion, if you think about it, with Republican full control, and then actual with some of the things coming up in 2 years or a year and a half, with a lot of seats at stake that aren't really endangering the imbalance right now towards the Republicans, you would think actually that the market may or should have climbed a little higher. So from a fundamental standpoint, I think there's some firecrackers that could go off, and I'm still not excited about being long and just kind of piling in the longs. I think it could catch some people long here. So yeah, I mean, somebody in the den's, Terry's talking about a constitutional crisis. Yeah, I mean, leave some lottery tickets on the put side. It might be one of the easiest piles of money you ever make. And if it doesn't happen, it doesn't happen. But, I think you've got a really, really good risk reward situation here relative to the chance, God forbid, something would pop up that would just completely disturb these markets and want them to recalibrate. And that could be, currency situations. I mean, you got a guy that has plainly stated all along the way that other countries are playing around with their currencies. And, whether that's true or not, we have to get into the math of that and put in a zillion variables. If you've got somebody that wants to recalibrate currencies, do you really honestly think markets are going to enjoy that and corporations are going to enjoy that? That's going to be an adjustment phase that won't be easy, and it could be extremely painful for some companies. So I'll keep all these things in mind. I don't think it's a bad idea to keep some lottery tickets on the put side, especially with the VIX in the state that it's in. You don't get that many opportunities to do. What are we at, sub 11 now? No, not yet. We have been sub 10, 4 days ago? Get going. That's pretty amazing. So here's the situation on the VIX. This is the daily. So this is why I'm really thinking that it might be a decent opportunity just to, and the thing about that trade really is, you look at how much percent can I make on my money. So let's say you buy a put at 5, and there's ways to mitigate the risk of just being flat out long the options. I think Larry has stated it very eloquently that people who buy options generally lose money. It's a very high percentage. So I listened to his show the other day, and he was basically saying, look, find a way to be able to kind of capture the premium. That is, being naked can be a risky game, but if you're looking at doing a directional play, trying to take advantage of the low VIX and some of the things that I said earlier about the fundamental situation, there are ways to kind of, do option strategies to, there's ways to sell credit spreads on the bottom, which means, selling a put, buying a put. There's also, and that has a defined risk situation that doesn't have unlimited upside, and that wouldn't really be like buying a lottery ticket. But there's also directional debit spreads you can do. There's some calendar spreads you can do. I really think it's a good time to start looking into those if you are maybe a little deficient on, or at least in your mind, deficient on what some of those strategies are and what are the appropriate strategies. A lot of times, Thinkorswim does a great option situation. Take a listen at some of the things that they talk about. I don't know if you can ask them questions or not live, but there's tons of things on the internet for simple option strategies to take advantage, and shows you the curves. I mean, a lot of times you can go and see the upside and downside pretty quickly, and some platforms actually for execution show those pretty quickly when you type in option scenarios. So, all right. That being said, and again, going back to the S&Ps before we completely get off this topic, I know we're pulling back a little bit this morning. Wow, a pullback in the S&Ps. But it's tough now to look at this from a chance. That's the weekly. This is the daily. We looked at that before. Here's the 240. On short term, you've got 2275, 2279 down here. But there's not a lot of ways to play defense on the long term shorting the S&Ps right now. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So let's finish up with the S&Ps. We're on the 240s. Having a little bit of a pullback right now, but nothing to write home about. So we talked about, when you have a chance, how to move up, obviously. This is the weekly. That's the weekly. This is the daily. And that 2076 rounded off is a pretty big number down there. That was kind of the launching pad situation on Friday. But here's the 240s. But the reason I wanted to bring this up is, in the scanner, when you have a new profile attempting to appear, that yellow bar is going to be this little yellow peelback. A lot of times the scanner's a little bit more active than the chart bars. It will give you a little bit more lead time than shown on the charts. It's just the way we've got the algorithm structured. But that means that you're going to have a new profile appear, especially if you have a yellow bar lock in. And a lot of times that is, believe it or not, that is a profit-taking mechanism for longs. And then when you have this new box appear, a lot of times you'll have the fair auction completely explored. In fact, as I look back on the 240s, and again, there was that kind of rally up into that 2284, 85 that there's so much to talk about here, really. Just looking at this is another thing to keep in mind. When you don't have a new profile attempting to appear, and this is, again, something that really had some volatility, you better seriously be looking at selling, in this case, bottom of the box, because you never had that happen, conversely. So that means that there was never a new demand area attempted to put in. When you had it right there, now see that? That means, again, you got profit-taking situation. You got profit-taking situation on the short side. Then you've got that exploration of the box, and you've got that inflection point there to lean off of. I don't know if you guys are seeing this, but, I don't use anything else to trade really technically except this information, and I use multiple time frames to try to gauge what's going on. I love the 240s. But when you have this, just like down here, you have this here, a lot of times you'll be able to, these are great trading opportunities when this type of new profile appears. Now, obviously, you've got the long-term, the weekly, and the daily kind of in explosion mode as of last Friday. So you got to watch out for these. You got to, make sure you put stops in. But, this 70, 76, 79 areas, really big support for this particular product right now. Doesn't have to explore it. It's just percentages say that, these fair auctions a lot of times are explored once they appear and they've been pierced. So I'm just kind of showing some history on the 240s there. I didn't catch the halftime show. Somebody's saying it was terrible. Did anybody bother to stay on the same channel when the halftime show came out? Anyway, let's take a look at crude. Really been blocking out the short side on this one, still the case. There's the weekly on crude. Caught some really good moves above 52.32. There's the daily. There's the I think last day we did the show 54.34 was the high, and the top of the box was 54.46. So that's your kind of initial targets, and now you've got to wait and see. You've got the opportunity down at 52.24, 52.32, and then you've got that first target at that neighborhood of 54.46. So now long-term trade still on long as far as I'm concerned, but you should be out of your trading bounce, or some of your trading bounce opportunities from a trading standpoint. Let's take a look at gold. All right, so I've talked about being hesitant on, and this is April gold, being hesitant on being short gold as we kind of reverse back up into that, February contract high, box high of 1211 on gold on the weekly. And, again, I think this is kind of, to some degree, and we talked about the dollar relative to this also. I talked about the dollar possibly not being supported down here at this weekly unfair low, not trying to buy this bounce. We actually went down a little bit too rich for my blood on the long side the other day. But I talked about, I don't know if it's time to be buying support on the dollar anymore down here. And that being said, gold, that default move up kind of had started showing itself early that it and now with the dollar, bouncing a little bit. I mean, gold's bouncing, not that default movement down. But 1235, 1236 is something to seriously pay attention to. You've basically explored the entire fair auction now on the April contract. But I'm not, even though the dollar's on support and gold's kind of on resistance now, I'm still a little hesitant to buy the dollar. For some reason, I feel like we're going to do a little bit of a flush here back into the weekly fair auction on the dollar, and I'll show you that really quick. That come down, bounce, reverse back down to it. I don't know about this. I mean, I think we could see 97.15 on this before we really start bouncing, and then that would still be considered in an uptrend, believe it or not, and that means gold would probably move quite a bit higher. So I'm a little concerned about, even though it looks pretty good, a little concerned about playing around with that. You got other things you can focus on here. Shanghai, we talked about the first targets in a wide profile on the weekly. This 33.96, we hit them, we backed off. What do you do with it now? I think you wait. I mean, I think the support area now, we got a new profile here, 33.27. You got to take a look at those leveraged ETFs that are advertised on TFNN, CHAU, CHAD, I believe. And those are indexed to the CSI. Let's take a look at the 10-year. Okay, so here's what we're doing this morning. Obviously, market coming off, it's doing a little move up here. I think this is a crapshoot. I'm not. I think you're rolling the dice big time, messing around with the treasuries right now. So that's something else. Leave it alone, in my opinion. Let's take a look at the 30-year. Okay, here's the 30-year moving a little bit more. Here's the bottom of the profile, 148.29. Talked about this thing just staying in a range for a while, just like the 10-year, but not a lot of direction. I don't think we've got any major moves up or down right now. A big pullback in the market might change things. I don't think any big rallies are going to change things. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. This is let me pull up let's see here. March soybeans. Let me make sure I got this right. Here we go. Talked about, John and I were John from Philadelphia and I were talking the other day. I was like, man, can't believe it. I bought some calls on soybeans. Well, they're working out a little bit, but I think the dollar, again, this is kind of more of a on support situation for the weeklies on beans, and also that possibility of the dollar coming down more, which would probably start making commodities a little bit more happier. So that's the situation on beans. Let's take a look at silver really quick. We talked about this thing, you know, gold and silver are right at simultaneously, seems like, weekly highs here. Silver's lagging a little bit again. Let's just look at the gold. I'll show you what I'm talking about. So gold making kind of new highs, but both of them are right now sitting against at least profit-taking situations, at least some. I'm not so sure they're going to stall here too badly, but again, you should be taking some off the table. I'm not super interested in going short these particular products. So let's take a look at a couple of ETFs that acted well last week. Here's the financials getting on their horse again as the market drove higher. Let's take a look at JP Morgan really quick. Yeah, this is just one you still want to try to catch, put a bid out there when you can, when it's on support, see if you get hit. Let's take a look at a couple of stocks in the scanner. I got the Olin up now. A couple of stocks in here. Downtrend resistance. We don't even have a lot of stocks meeting breakdowns, downtrend resistance, uptrend reversals. These are scant little situations. It's kind of amazing. And if you, conversely, if you look at breakouts, had some stocks cooperating, breaking out of profiles last week. I will say that. And uptrend support, decently populated. Couple of stocks here. Whole Foods Markets. Let's take a look at that one. WFM. Had a friend go there this weekend and spent $450 in one pass, which that's amazing. So here's WFM. Last week finished on the lows. This is one where, you know, the market, the beta, I know this stock doesn't have a lot of market beta, but, you know, if you look at things that, you know, the market possibly sitting on a launching pad to make new highs, I mean, that's the way you got to look at last week if you're an investor, and then people actually exiting this thing. So I'm not super excited about buying this, even though, you know, we've had a profile edge higher. I think we could just kind of settle back still on WFM and trade the breakdown. Yes, $450, 450. Here we go. A couple other stocks, and again, this was on uptrend support, but I just kind of think that, you know, the lay of the land for this stock is no mystery. Things on their lows can go lower, and I think we could break down on this one. DHI, let's take a look at this one. This is one I'm not so shy to pull the trigger on the support situation. 29.83 is going to be support on that. Let's take a look at Fluor, FLR. Here's not a bad little situation here on the weekly on fair highs at 55.50. But, you know, the thing, I'm showing uptrend support, and these are obviously stocks that pulled back into support as the market kind of blew up last week or Friday. So I think it's a little bit, you know, just kind of trying to figure out what to try to find the anomalies going on. I'd go into stocks that just completely did not cooperate and are showing their self. Electronic Arts, let's take a look at this one. Yeah, this is see, now that one's got some support close to it, so I don't want to mess with that one. PSX, Achimama. Whew. That's a pretty big stake in the ground, that weekly close below here. Yeah, it's nothing to look at on sale for sure. Schlumberger, this one kind of broke my heart a little bit. I was hoping this would bounce, but again, that's what stops are for. Here's the weekly on for low, 83.19. Don't want to mess with it yet on the long side. A kind of a reversal back above that area would be pretty cool on Schlumberger. Under Armour, let's take a look at this one. You guys know what the drill is there. I was always trying to figure out when that was gonna peter out, and obviously it did. Spandex, don't they call it something different now? Anyway, here we go. So we talked about when this thing caved in the other day, we talked about, you're playing around with fire, trying to catch the sword here. It's still the case. I mean, you have this is long-term weekly. You looked at the daily. You have nothing to hang on to here. Here's the 240s. We actually closed below the 240s here. This is ugly. So it's not time when you start. The only way to even play around with this on the long side is when you start seeing that new profile attempt to appear, that yellow sign on at least the daily, then it might be okay to start looking at getting in the water, but nothing doing yet. All right. Let's see, Nike. See, now this is not a big move down, but 50.65, I think you could probably see that on this stock. Hanes Brands, man, how many times have we talked about this one? Ooh. This is one that we've basically had on the short radar screen forever. It's just continually been on either breakdown or downtrend resistance. And why? These sorts base things on weeklies and dailies, and as you can see, Hanes Brands breaks down resistance, nice reversal there, and obviously some news-driven stuff there. But let's pull up HBI. Oh, I think we've got a caller. I'm sorry I didn't see that. Victor, you're there?
Yeah, I just wanted two quick ones. I don't know if I can hold. DO Diamond Offshore, they just came out with earnings, and I found a really good metal stock. It's, hang on one second, the symbol's GGB. Tell me where you think GGB can go.
Okay, Diamond Offshore. Yeah, I mean,
did you touch that?
Where are we at pre-market? Let's see.
Is
this about $8?
And it went up $1 on Friday before their earnings.
I think you're right at resistance at 18.10 right now on that one. I tell you what, I'll look at GGB after the break.
Okay, sounds good.
Okay,
All
thanks.
right, thank you very much.
Thanks, Victor. Sorry about that.
Bye.
Okay.
Bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Looking at the XLU right now, and considering that we talked about rates just not being worth putting the trade on right now, any direction right now, just kind of a step back and let somebody else figure out the first move. Utilities, similar situation because it is a rate sensitive sector, if you will. Here's the weekly, the daily we just showed. So no edge here. I think you could start looking at trading the utilities, breaking out of that range, 48.12 to 49.08, but really nothing doing there right now. Let's take a look at the healthcare sector. This is one, Trump had, you guys know what happened there. It's like a James Bond movie, like Dr. No, or one of those guys inviting all the heads of a department together, and then somehow they just, that's what I was thinking about when he had them. Hey, come on down. We're dealing. Anyway, the XLV, you got to, I don't think the clarity is there yet. 71.59, I think you should be taking some off if you played that type of scenario. You're at some resistance right now, and then you got some more resistance to 72.72. So I don't know if that's worth stepping into right now yet. So a couple other stocks we need to look at. Amazon. Was that Dr. No? Was that the one where or was it all of them where they invited all the heads of groups in? Can't remember. All right. So Amazon. All right. Big number down below, 808, 809. Kind of reversed and closed above on Friday, make sure we got the right. Hold on. That was the daily. Excuse me. I knew I was looking at something weird. Here's the weekly. So 847.21 basically started out the week there, and then kind of reversed above the lows on the daily there. Talked about that would be the area to kind of focus on if you're trying to play around with this after the earnings. 808.09. So had a nice close, kind of reverse above there. I think you could look at this as somewhat of a chance to play defense on the long side. Looks like we're printing this morning around 808, 809. So sitting right there at the precipice, trading a little bit lower. I wouldn't mind trying to nibble on this above that area. Such a difficult stock to short. Whew. Facebook, here's where we're at on the dailies on Facebook. I may have just a little bit of a technical flush here, but you never can expect a big move down with that particular stock. Let's take a look at international paper. All right, so kind of broke that first area where I was trying to nibble again, 54.68. This is a nice boring stock that I love to trade. Right now, no edge yet, but you got support 51.40 and then breakouts again above 54.68. So it's kind of a no trade. I had a email about that. Good old IBM. All right, so stock that's really been kind of getting some legs here. Here's the daily on it. Showed up on uptrend support the other day while I think I wasn't doing the show. So 172.53, that's your new support on it. Profile appearing below price action. Remember, that's you got to buy those inflection points if they come down to those in that scenario. And I think it's it's something that actually could move a little bit higher. Let's take a look at the dollar again. So and let me reference some other currencies here first before we get back into that. So here's the euro. It's kind of sitting on support here. This is another reason I don't like the dollar right now, even though the dollar's on long-term weekly support. The yen has bounced a little bit this morning, just a tad off its lows around 111. What is that, 97? So 111.67 was the back to truck up number, but I'm not so sure this is going to kind of do a little bit of a flush first at the very least. Anyway, I don't like being short the yen, but I don't know if it's time to look at this from alongside. You've had a couple of, get away from the areas just like on the dollar, and then kind of reverse back, and those are usually, wow, I didn't get out of my trade before. Now I'm going to be forced to get out of the trade. So that's, just from a trader mentality, you kind of got to think if folks are long these things right now and they didn't get out on the trade and bounce, and there might be a little bit of a everybody trying to get out the door at the same time situation on the dollar and the yen actually. Talked about this one, decent move last week coming up above those 75.39s on the Australian dollar. We talked about this one, decent long opportunity. Still feel like that on this one, 75.94 new support on it. Hadn't talked about this one in a while, Chinese currency. Still looking for a new move up on this one. I know we've broken down on the dailies, but the back to truck up scene is around 68.105 on the yuan. Okay, so let's go back to a couple of stocks I was going to. Okay, the dollar. Excuse me. So if you're looking at this and you said, wow, okay, wow, we reversed back up and closed above these weekly highs, or these weekly highs on the box. We had a profile appearing above price action. Logan's breaking all his rules, not buying this. I don't think this is going to. I think there's too much tension in the air. Like some of the things we talked about with Trump to really start super getting long the dollar right now, and I think it could start driving some people out of that trade if it does reverse. Home Depot, talked about this one, the eternal long, catching this last week, 136.99, 137. I still think this thing could actually break out again above 138.89. Coca-Cola. This has kind of been, the eternal short for me lately. When it's offered resistance or offered breakdowns, you got to be buying, and you got to be taking some off. This is our weekly box on Coca-Cola. Not a lot of leverage right now, but I think we could continue back down to 40.51. It's been a decent trade. Johnson & Johnson. Okay, so we talked about this kind of reverse back up, and then this is kind of the powerful trade, the retest of that reversal. We kind of got what we wanted on this one, 117.23 down into this 111.96, but that kind of weekly reverse last week. And here's the daily. In Johnson & Johnson, I actually think we could go higher now, and it might not be a bad situation to try to catch a bid on this with stops below 113.36 on J&J. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, just do a little recap here before we close the show. S&Ps, here's, we talked about this. Not a lot of chances to look at anything from the defense side until you have one of these. This is our 240 time frame. Don't have to see it. Probabilities are we could see a exploration of the entire fair auction on the 240s down to 2280. That doesn't have to happen, but that's your retracement area. You got 2276 is also decent support down there. Gold, not super excited about shorting this, even though the dollar's on support and gold's on resistance here. I really like how gold's acted lately, and we could just drive some people out of this trade before it reverses, if it reverses. So I'm not exactly excited about trading that from the short side right now. Here's that dollar trade we looked at earlier. Just not wanting to buy it, even though it's a super classical setup in my mind, historically. Silver, similar situation to gold here. Let's look at the March contract. Here's, again, sitting right there, but both of these look like they want to move higher to me. We're going to take a look at copper. This is a daily on copper, so a little bit of a bounce on today, but again, I had an email about that. I don't think there's any leverage there on copper right now. we got to take a look at Apple. Okay, so here's the daily. You know, we had talked about not being short this, all right, even before this happened. And again, blocking out one side of the market, blocking out one side of the market is kind of our claim to fame on using these profiles. You do have, for people who are just daring and wear cowboy hats, you do have a little situation here on the 240s. If you must trade Apple, that bottom of the profile on 240s exploring at 127.94 is your target. You had that yellow bar appear in the scanner, same thing. Then you get boom, locked in. Things you can count on, play defense against 129.23. Believe it or not, that's your lofty target down below right now, 127.94. Still got decent little risk reward trade there on a day trade. Big Mo, been really super bullish on this one. If you guys have been watching this show, and really gave you some really cool things last week to buy support, a lot of volatility coming back up. This is exactly what you want to see on stock action. You see a stock that's long, strong, in a market, outperforming, and just wanting to be on the launching pad again. So stops below 70.85 on Big Mo. Don't see a lot of risk in this one. That's when it usually caves in. Here we go. 3M. Had talked a lot about trying to, think that maybe this was something that could be shorted. We've been looking at this for a while. Hadn't exactly been going out to market. I actually think that this one can have some more downside here on 3M. So where's the downside? 165.63. Guys, thanks for joining us today. Stay tuned for Larry. You will thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.